Good evening. Good evening, good evening, good evening. Just drawing some trend lines. I'll wait for some people to get in. If you are here, how you guys doing? Good, I hope. Love this trend line from today. Gonna fool around with this one. Kind of just looking while I'm waiting, or waiting to kick this puppy off. Oh, there we go. Connected to the buy. Interesting downward channel there. Hope you guys did good today. How'd y'all do? Was it a decent day overall? I thought this morning was super choppy, super difficult for the first few minutes. And it got a little bit easier as the day kind of went on. Came close. No, just leave those. I need to clean up some of my charts. Alrighty, well, I'm sitting here and doing a little bit of drawing, so we'll let's talk about this morning a little bit. Let's talk about I want to talk about what I did in the afternoon to come back, what I did during the day to come back. Almost hit a stop loss this morning. Thankfully I didn't. Ended up coming back, having a green day. Small, flat-ish green day. Good day, but so talk about that a little bit, talk about the week, talk about some plans, and yeah, we'll just we'll see where this goes. Answer your guys' questions if you have any, and we'll go from there. I'm Gator, and this is you know, whatever the name of the show is, our weekly discussion. Monday Madness. Meh. Alrighty, guys. So, quick recap of this morning. When was this morning? Here. Let's go to a 1 minute chart. Obviously traded Tesla. 821 hit. So, oh, sorry, 2170. Needs to be a level just in case, because that is last month's low. So, gap down this morning. Kind of annoying. I ended up taking Tesla long somewhere in here when it failed to break down on a limit order. What's up, Con? How's it going, brother? And I also am going to answer a Discord question that someone asked yesterday. Or, yeah, yesterday. I want to go back to it. XOXO asked it. Good day. Nice, man. What'd you trade? So, as soon as this long didn't work, I got out for break even and then shorted and ended up making a little bit here on this short. I was hoping Tesla was going to break that 121. It didn't break that 121, which was on the monthly. Came out to, I believe, this month's low. Or was it last month's low? Or was it a weekly? 121 was a level that I had for some reason on Tesla. I think it might have been the weekly. Monthly. There was a pivot there. 821.70, yeah. So 821.70 was last month's low. So 821.70 was on my charts this morning. I was watching Tesla into that level. I took the breakdown and then ended up making, I don't know, 1.5 or something on puts there. It came very close to hitting it and then bounced. I was watching that level. I ended up pretty much giving back most of what I had failed when it failed VWAP. So I took it short at VWAP and broke even or lost. I think I lost on it, and then took it again at the 8. It failed. I left it alone. I scalped around, and I accidentally, at some point in here, I think I actually, I don't know where I did it, but I didn't mean to do it. Oh, the triple Qs. Nice. Yeah, Geronimo with his triple Qs callouts. I didn't trade them well today. I didn't trade the Qs well. There's been days when you can really, I actually did the Amazon today. I'll talk about that in a second. I traded Amazon, man. I traded Amazon pretty decently. I've been trading Amazon instead of the Qs just because I liked how it moved. But the Qs were definitely a good vehicle today, and there were a lot of good short opportunities in it. I accidentally bought calls, or puts somewhere in here when I meant to buy calls, and I had 2 windows open. I bought the wrong one. Don't know why. And then lost like 4 points or something with 10 contracts, and instead of being like up $500 or something at that point in the day, ended up down like around 4 grand. And I ended up having to scalp back, and I was like, okay, well, you screwed today up, so what are you gonna do? The day's choppy. We're in a range at this point. The triple Qs were kind of in a range. Nothing really was working, so I was cautious. I don't remember exactly what I did all the way through. I do know I shorted square somewhere in here. I called it out around the time I was going to get in it, but I ended up taking square short and made like 50 cents on it. Made some back. I scalped around whatever me and Mitchell were trading. I think we traded Tesla like about 45 minutes or, oh, come on, quit doing that. About 45 minutes or so into the day. When things started actually breaking down, Mitchell and I were scalping Tesla. I'm sure some of the rest of y'all were. And I scalped back to like a couple hundred green. It might have been Amazon too. I can't remember what I called out at this time. I can't even remember what I traded. I had to go back and look. But whatever it was, I ended up getting green. And then I took, I think, an Amazon trade that didn't work. And then I went and red $1,000. And I was like, okay, this is annoying. I'm going to come back. I'm going to leave it. I'm not going to force this, because even though I was trading small and size down, I didn't want to go red, and it's so easy to start putting in losses after you go green to red, and then you start kind of chopping around a little bit. It's so easy to kind of screw up and turn a $1,000 or $500 red day into a $5,000 red day. So I came back in the afternoon and for a few minutes, and I was like, all right, let's look at this chart. So Geronimo talks about zooming out. I want to zoom out on the 2 minute. And I don't remember what time of the day it was. It was after 1. It might have been after this trend line hit. This trend line was today. I don't remember if I caught this one. I might have caught this one. It might have been up in here. I might have hit this one. But so either way, I drew this trend line, and I looked at a bunch of different charts. And short of like shorting square, which is pretty easy to do, they did respect the 21 and the stochastic sine con. And I use the stochastics with the triple Qs to short Amazon a couple of times. That's how I made my money back today, was scalping Amazon when people were trading the Qs. I traded Amazon, and when the stochastics got oversold or overbought, you wait for that point and you enter and you just follow the stochastics. And another name that was trending, Google wasn't trending as much today. It was much more stuck in a range, and I tried it, but it just really wasn't moving past those ranges, and it really held up pretty well overall. But Amazon was going lower, so I would time up. I sat here, and I didn't catch these whole moves, but I would sit here and wait for the stochastics in the Qs to line up, and I would just wait. And it was like you would miss it, and sometimes it'd go down without you, and I would wait. And then you would get these time ups where like a 1 minute 100, or if you're looking at here, if you're looking at the 2 minute chart, you know, the 21 was what I was watching in Amazon, and the 21 would hit and then it would fail, so I could scalp a point here. And I wasn't holding for the whole move. It was just like I took 5 contracts, and it was like a point at a time. What up, Blademan? or 50 cents at a time. So it's just wait for the 21 to hit, time it up with something happening in the Qs, short. Wait for the 21 to hit, short. Wait. 21 busted through, that's fine. We hit the 100. I think the Qs hit something. Geronimo probably called a short here. I don't remember. I'd have to go look at the Qs, but short there. And then I actually shorted this one too, and this trend line held up. And I wanted to show you all this trend line. 2-minute chart. If you go back to 5/4 of this year, 4 p.m. candle, and draw it down, and draw it on this, on the top of that candle, basically, to the body, not the wick, if I zoom in, but the actual body of this candle is where I drew it. And this is kind of what Geronimo talks about with it not having to be perfect, but with it basically, I don't know why this is off. If you draw it on a different timeline, like a 15-minute, it does this. We'll do that, connect it. There you go, same thing. So you draw it through there and you connect it to the body of this one, because this is obviously just a pop and a drop. I took that, and you can see that every time it's hit this top of this trend line, it's rejected it. It hasn't busted out, and the only time it did bust out, it came back down through it. So I think this is a really good top sign for Amazon. If you're watching it in the future and you want to draw that, I think this could be a powerful trend line. I don't just draw random trend lines. I really define something that's hitting and that has a reason for me taking it. This one seems to be holding up right now. So I shorted when it hit, and I'm going to be watching for it to hit again. So it was like here on these candles, and you might think this isn't much, but in Amazon, every time it came up to the top of this range and was near this candle, for all 3 of these candles, I shorted them and like just scalped them short. And then up in here, it's like it's probably not going to hit it again. It broke down. You had a little bit there, and then I got back to pretty solid green. And I actually ended on a decent day for going down red early and just coming back at power hour, finding this trend line, shorting off of that trend line when it hit, and catching a little bit of a drop in Amazon at the end of the day. Haven't tested this trend line out, but I drew another trend line here that I think is maybe decent. 5/4/22, 10/18 to the bottom of 11/28 on 5/5, and that one's kind of held too, and it hit today. I don't know how good this one is. I had to play around with it. I was just throwing it up earlier, but I thought that this was a good exercise for me to do during the day. After I came back from going green or red to green, or technically I was green, then I was red. I came back green. I then scalped my way back to green, and I thought that this was a good midday exercise, was going through different charts and looking at things and being like, okay, let's look at where we're at. Let's look at some of these names. Let's look at, like, you know, different names and try to draw a trend line. Try to find something that you think is decent. And it helped me kind of zoom out and get perspective instead of just looking at my P&L and looking at, you know, you're down. And not that $1,000 or $1,500 is a ton, but it doesn't take long for $1,000 to turn into 3,000 or 5,000. And then you're starting your Monday off pretty low. Much easier, you know, and that's not what I wanted to do. And I wanted to be really cautious with how I was trading. I wanted to be really cautious with my Monday, start off nice, so I could start off the week with a little bit of a positive note and then kind of continue that momentum through the week, as opposed to being like, okay, now you got to get it back. Well, now I had a green day. So instead of just coming back and sitting down and trading, I came back and I tried to zoom out and get a good OODA loop going of, okay, what's going on in the market? We're in a clear downtrend in the triple Qs, short of like FOMOing into, because you just see it's just kind of, you know, generally going down. So short of just square, which was just, you know, beautiful, short of just shorting this off of VWAP, which you could have done here and here, which is a nice one. There's probably some lines I could draw on here. I'm gonna have to look at this one later. But short of square, just jumping in it every time it hit something and failed, I needed to look for a good setup. I needed to zoom out. I needed to look through the names I was comfortable with trading and to see if there was something I could spot, a trend that I could spot that I felt comfortable shorting. And I looked at what Khan is saying, the stochastics in the Qs. I went to my four time frame charts and I checked the stochastics. I checked them with the cues. I found names that I thought were moving. I tried to find some stuff that matched up, and I thankfully scalped my way back to green. And that is that was my Monday. It was a rough Monday as far as I don't like sitting here and trading as much as I did. I generally like to lock it in early, but hey, sometimes you got to do what you got to do. And I'm not mad about the day. I'm glad that I could come back and get green. And if I would have got green early, I definitely would have done something else. I probably would have went and worked on my golf swing today or something. Nothing wrong with that, Rebecca. I'm very glad you took a day off. That can do wonders for you. Absolutely nothing wrong. And you picked a great day to take off, so there's not even any FOMO. Like there was nothing, unless you like shorting square. And there was some setups later in the day, but if you were trading early, you definitely would have been like, it was a rough 45 minutes to start the day, I think. There were some opportunities for sure, but if you're really waiting for like that reversal pop or a smooth move, there was definitely no, nice Martin, there was definitely no smooth move. What's up, Martin? How you doing, man? Glad you took the day off. It's nice to relax. I am taking a lot of the middays off this week, so I'm going to go golfing tomorrow with a friend, and then I'm going golfing on Thursday with a friend. I'll be here Wednesday. There's some market news coming out. We could get a rally Wednesday afternoon into that news. You never know. So I'll kind of be here for that. But I thought tomorrow I'm going to trade for 30 minutes to 45 minutes. I'm going to go golf. I'm going to trade Wednesday. Then I'm going to trade for, an hour or so on Thursday and go golf, and then I'll trade all day Friday. So that's my plan for the week. I'll probably do a show on Wednesday, or I'll do a trade review show on Wednesday. It might be live, might not. We'll see. We'll see what's up. But I'm going to be paying attention to that trend line I showed you guys. Very important for me to watch this and to see how it reacts every time it hits it. In my opinion, if it hits it and it fails it, then I'm going to short Amazon every time until that fails. If it busts up above it and starts popping up, then I'd look for like that as a support line. Kind of like when Geronimo came on and talked about trend lines, what he talked about and how he uses the one with the Qs. I like this one on Amazon. Amazon very weak, very bearish overall. I want to answer, and if y'all have any questions, throw it up in chat. Let me go to XO. I should have messaged you if you're watching this about using this. Let's see. About using this. Nice. I went and got a massage the other day. It was super nice. Let me jump to yesterday's question. And a few people commented on this, and I wanted to say it. So it's a tier sizing question. So tier size. And before I jump to the tier sizing question, really quick, it is important to zoom out. The only way I was able to get back today was not doubling down, super focusing, and just like smacking stuff short. It was zooming out, finding a trend, finding something I liked, looking at what the charts were doing, looking at when I thought I should short, waiting for the right setups, and instead of just jumping into stuff, I was going trade hunting. I was looking for a trade. I was waiting for a trade to find. Yeah, holding for a pullback has really been great. You get that pullback, you get the top of that 15-minute breakout that fails, that 5-minute breakouts that fails, and then it goes down. That's really been key for me. And I really just sat there. Don't wake up, child. One of my kids are waking up. Text my wife and see if she's still awake. And that's kind of been really key for me. And it was key for me in my success today. If she doesn't get him, I'll go get him. And then I'll have to be right back. And if you can do that, and if you can kind of chill, you can make your day back. But you really have to still have confidence in yourself. And that was kind of key today. I messed up because I misclicked. Not necessarily because, oh, she's got him. Not necessarily because I was just overtrading or anything. And that kind of set me behind, and then I had to come back. so I wasn't lacking confidence in my trading ability, and it's something to notice about yourself. If you still have some confidence in your ability to trade and you're doing fine, if you don't have confidence, you need to step away and come back with confidence in what you're looking at. But if you can come back, sit down, get some confidence, zoom out, find what you think the chart's doing, use the Discord room or the VTF if you're a member of the NewsBeat live room, and find some stuff that's working, get some confidence in a position and take it, you can scalp your day back, and I'm glad I was able to do that today. Every day you're definitely not able to do it. So let's talk about tier sizing, or hang on, sorry, Colton. I mean, the not being over 25,000 could like slow you down because you're hesitant to get in or out. I do have, if you look at all the trade review shows, I talk about entries. So if you go back and see any of my videos that talk about trade review, you can check those out. I will, if I do a trade review show on Wednesday, I'll make sure I talk about it on that one too. So you can kind of see what I'm talking about for tape entries and stuff during the day. If you want to ask that question in Discord, especially when it slows down, or like at the end of the day, if you heard me say something during the day, or a trade I took, and you want me to like review it, I could pull up the video of it if I was recording my trades that day and stuff like that. So you can kind of I can do it, but I do know on several of the trades where I actually review trades, I talk about some of the tape reading stuff and entries for what I'm looking at. And it's kind of like Mitchell says, when I'm looking for it to go, let's just use the number 805. I'm looking for Tesla to break 805. After Tesla breaks 805, when it flushes 805, I'm going to get in it with a stop at the previous candle's high. So he's telling you, or I'm telling you what we're going to do. It flushes 805. As soon as that tape slows down and maybe starts ticking down, we enter. And it's just the confidence, and it's kind of like a shooting star that it's gonna go in the opposite direction. Yeah, Bitcoin did die, or it will die. So, no, you're good, man. I definitely don't mind answering the question. It's a key thing to kind of recognize and to be able to do. And then it goes through, and I'm like, okay, we're in, and my stop is 50 cents higher than here at the top of this candle, and the difference is we can get in and out, so it's not as nervous for us. If you're kind of second guessing your entries and exits, it can slow you down, which can mess up that like super fast entry, and then you're in it 5 seconds later. Plus, if you're waiting for us to say we're in it, like I say I'm in something, like even if I say I'm in it, like I click the button, okay guys, I'm in, that's a 2 to 2 seconds delay from me clicking the button to the words getting into your ear, and then there's another second or two for you to react. So you're 2 seconds, 3 seconds, 3 to 4 seconds slower than me if you're waiting for me to say, okay, I'm in. Like, I might say it even as I'm entering. The chances of you clicking it right away, you're still 2 seconds behind. So there's going to be that little delay on a name that's ripping. If you're like, what is he seeing? Oh, wait, okay, it's a little bit lower now. All right, I'm in. Because you're waiting to hear us. And if you're waiting to hear me, Mitchell, CT, Rose, anybody say something, or actually call it out, you're gonna be a little bit behind us. But if we say it beforehand, like I'm looking to get in at this level, I'm looking to do this, and then you see it happening, and then you take the trade, you'll be able to get in quicker. So yeah. So the question from XOXO in Discord, and I don't mind using this because you posted it publicly in here. Said he generally trades 1 to 2 contracts with a max stop loss of about 2,000, and the max gain he generally makes is around 1,000, just because of his trading style when he trades, and generally about how he does with that tier size. He's usually around that, which is really good for 1 or 2 contracts. And you've started day trading small size, and you just lock it in before you give too much back, because eventually he'll, at some point you'll get a lot higher, and you'll kind of be more cautious. And he's asking about contract size. You say, I generally don't size up, but when I do, the sizing up in itself doesn't necessarily faze me. That's a good thing. On any individual trade, my heart rate stress level is simply based off of the trade working, not working, and then how well or poorly it's working or not working. Whether you're taking 1 contract or 5 contracts, for example, this feeling of focus is the same. That's a great thing. Sometimes on your bad days, you'll size up to 3, 4, 5 contracts in an attempt to make back losses. You can go green 1,000 to 2,000 runs over relative extended periods. Yeah, that's pretty easy to do with 5 contracts. And you know you're not supposed to size up when you're not doing well, but ignoring that, the other takeaway from this is you can do it at times, and you can successfully trade with size over decent chunks of time, an hour or 2 hours. So you trade really well with bigger size for over the course of an hour or two, sometimes, like within a day when you're in a good run. Now here's his issue. So that's great psychology. You're getting better. XO, you're doing solid. You're consistent. You're not scared when you size up, at least to 5 contracts. It doesn't bother you at all. Now here's the issue. You don't think you're consistent enough in your trading abilities to size up right out of the gate, meaning I assume every day, so you don't. So you're not confident in your early trading abilities within the beginning of the day to size up, so you don't. But that means you can have days where 6 out of your first 7 trades are green, and you look up and you're only $300 up, which can be deflating, because then you start thinking, is that all I made? I only made 300. What in the world? I should be, you know what you would have got with 500, you'd be up 2,000, and it's frustrating. I understand that. So then you start sizing up or over trading at the wrong time. Like for instance, after a move is over, you're done. You're batting really well. You size up, and then you start over trading or sizing up because you're trying to make more money. And then you usually do that when the market is in consolidation or reversing. And boom, just like that, you lost all your gains and you're pretty solidly red. So you often feel like trading from a tier down size, 1 contract early, can lead to bad outcomes. I agree. Frustration and then sizing up, usually 2 contracts. So you go from 1 to 2, you double your size, and then you're like, if you were up over 1,000 on those good early days, you'd be able to lock it in. But as it is, you keep trading to get there. You keep trying to get to that $1,000 level. Any thoughts? There may not be many concrete answers to this, but you're just wondering how others might think about this. So first, I'm going to answer this like I was talking to myself, because I do not give investment advice, trading advice, stock picks, or any other thing. This is for entertainment purposes only. So I'm going to answer this question as if I'm talking to a young Gator trader or even Gator trader right now. Because let me tell you a secret. That doesn't necessarily go away when you go from trading 5 contracts to 10 contracts or 10 to 30. I had to get used to not being 5 figures green or red every day. Like I was very used to just being like I'm 5 figures green, I'm 5 figures red. Like, oh wow, now I'm only making 5,000 a day. Oh, I'm making 10,000 a day. I'm only making 2,000 a day. This isn't good enough. That doesn't necessarily go away until you just stick within like a contract tier size. You're just very comfortable with where you're at. You're making what you need to make, and you're not jumping around different tier sizes. So as you progress, this is going to be kind of a constant thing, especially when you start doing 10 plus contracts and you kind of create a bigger account with bigger size, and you're willing to take on more risk in some of your trades, and you're willing to kind of mess with that a little bit more. You're going to still have this issue. So this issue isn't something just for small account traders, so I think it's an important thing to kind of discuss, even discuss with myself like I'm talking to myself right now. So because your first thing that you said, the first thing that you said that's important is it doesn't bother you if you're trading 5 contracts. So first, I don't know what your account size is. I don't know how you're trading. I don't know what your general risk is, if you can afford to generally trade with those contracts and take the wins and losses that come with them. I'm going to assume you can. Assuming that you can, you need to, as it were, I would say to myself, man up. And it's honestly that simple. It's at some point in this game, you've got to just trade. Now, maybe in the first 5 minutes, when the market is volatile and jumping around, you don't. But you should have a default contract size that is going to pay you what you want to get paid doing this. If this is not your full-time gig, and you want it to be your full-time gig, and you're comfortable with trading 5 contracts, freaking trade 5 contracts. I, after only trading for like a month or two, was trading 10 contracts. Now it was Amazon. I wasn't jumping in 10 contracts at Tesla. But it was Apple, not Amazon. It was Apple, not Tesla. So you know you know the name that you want to trade, but if you're comfortable trading 5 contracts of Tesla, then trade 5 contracts of Tesla if you can handle it. If it's not bothering you, you're just looking for the right trade. And often throughout the day, you're going through these hot runs and you're 6 out of 10, 6 out of 7, or 9 out of 10, or 7 out of 10 in your trades, and you're making money. And you're like, yeah, I'm doing this. You're hindering yourself overall by trading smaller. The only reason I trade down to small size, the only reason I trade down to small size is because I know with 5 contracts I can still make 2 to 5 grand in 30 minutes of trading, or within the first 5 minutes. If I'm trading 5 contracts, and my goal at the open it depends on the day. If we're very consolidated, I'm usually trading 10 contracts at the open. If we're not consolidated and we're in a gap, and I'm expecting a bigger move, either a flush or a gap fill 50% retracement, like Amazon did here on this chart, then I'm doing 5 contracts because I'm expecting a bigger move. I know I'm going to get paid, a point or two. You'll be a grand or two up on 5 contracts. So, and I'm cool with within the first 5 minutes, instead of being up or down $10,000 or $5,000, I'm cool within the first 10 minutes of the day being up or down $2,000. And I'm going to be able to trade consistently and have confidence in myself to either trade smart, put a few wins together with 10 contracts after that to get my day where it needs to be, so I can feel good and log out or whatever it is and find the right trades. As opposed to doing 20 plus contracts right now at the open. For me, it's just not what I feel comfortable doing with where I'm at right now. So I'm not doing that. There may be a day when I do it again. So if you have the first part of what you said is key, you're comfortable doing it, then stop trading 1 contract. I'm not telling you what to do. I would never tell you what to do. Start trading a contract that's going to pay what you want to pay. At some point, you got to jump in. At some point doing this job, unless you just want to freaking stop doing it, or you're just doing it so you can just say you're doing it and, whatever it is, like, you just need to jump in. Now, if you're fine with $300 a day, $300 a day per everybody's favorite poster that I like to throw up that I need to, like, move over the side. If you're like, all I make is $300 a day, okay, I mean, what did I do? That's not horrible. I mean, $300 a day is going to get you that a year. So, but if you're like, I on my day want to make $1,000 to $2,000, then stop trading 1 contract. If you're like, hey, I think I can get out with 1,000, I mean, that's not going to last for long. You're going to make 1,000, and then you're going to size up, and you're going to do all that, and then 1,000 won't be enough. But generally speaking, at some point, jump the freak in. At some point, take, as long as you can handle it, as long as all that stuff's going on. Don't change how you're trading. Don't change what you're doing. If you're a little bit more inconsistent in the first 15 minutes, or you need to see a trend develop, don't trade for the first 15 minutes. Or take 2 contracts for the first 15 minutes, or 3 contracts, and then go up to your default tier size of 5. And just trade those 5 contracts if you don't think anything about it and you're just looking to see if a trade works and you're confident in your trades. And, oh wait, I know when to trade and when not to trade. There's no reason to sit here and keep trading 1 contract. The reason CT, like, he talked about it on Friday's show. Like, one of the things that got him consistent, he sat there and he traded for 6 months, 7 months, whatever it was, with really small tier size, and he got really confident in his ability to trade, and then he sized up. Do you have the confidence in your ability to trade throughout the day to catch these hot runs? You don't need to have a bunch of wins. I'm not trading 5 contracts in the morning to pad my P&L so I can size up. I'm trading because it's the risk reward and how the market is and how the day is. Like today, a gap down day. On a gap down day, these gap days, they're not always great trading initially. So I'm sizing down because that is part of my trading plan and the risk reward. I'm not sizing down to where I cannot hurt myself. I'm sizing down to a point where I can still make money, I can still lose money, but I'm comfortable with where I'm going to be at after 10 minutes in, as opposed to choppy days, getting chopped up early and then having to spend all day in a crappy market trying to come back. So, a little bit of a ramble here, but at some point, you just have to size up. And from what you said in the first part, I'm not telling you what to do, just my opinion to myself. At some point, you have to just size up to your comfortable level, 5 contracts, 10 contracts, and what you can take, and just freaking trade. Assuming you're a winning trader and you understand what you're doing and you're happy with what you're doing and you're doing it and you're going in and you understand your strategies and you understand the trades you're going to take, and sizing up is not going to change your entries, your exits. It's not going to change any of that because the size, like you said, has to be a non-factor. So the size is a non-factor. Okay, so if 5 contracts is a non-factor, then stop trading 1 contract and start trading 5, and then get some wins. Find what you're good at, whatever strategies you're good at, take those strategies, make your money in them, and then size down so you protect your day and you've got your cake that you've made. You've got your whatever you made, and now size down to 1 or 2 contracts and scalp some moves for fun, and maybe add another 25% to your day, add another $300 to your day, which is another $75,000 a year, because you're just sitting there. Give yourself like a 25% risk, and you're either going to lose 25% of your day or you're going to go up. And so then size down after you get up a little bit. So remember, the first thing you said was it doesn't affect you sizing up, because you're saying it doesn't affect you sizing up, and obviously you're not happy with a $300 day, and you seem to be a great trader who you know what you're doing, you know how to hit these different levels, you know what you can do and kind of where you should be at. Change your default size, maybe 3, 4, and 5, and then, or I don't know, whatever you want it to be. It doesn't matter. You could do 2, 5, and 8. I don't know. And instead of then sizing up to get it back, just find a consistent number that you're happy with. That is the one thing that's slightly worrying, is you say you size up to make your money back. That's going to get you as you size up, generally speaking, because if you're losing on 1 to 2 contracts and you're sizing up to get it back, when you start losing on 5 contracts, you better not size up to 10 contracts to get it back, because your account's going to be blown out really quickly. So it was a lot to say to kind of type it in. So it was a lot to kind of type, so I figured I'd just address it on the show, and I'll just message you and be like, answered your question on the show if you're watching. There you go. Thoughts about that in comments about what I said or any of that. So, and there's nothing wrong with taking different sizes, and there's nothing wrong with, if you're having a hard day or hard month, kind of sizing back down and trying to be consistent a little bit and kind of messing around with that. And there's nothing wrong with messing with some of those levels and messing with your size after the fact. But if you're really comfortable in that range of 5 trades and it doesn't bother you, it's not changing your entries and exits, and you think you're at that point, and you know that you know what strategies you're good at and what levels you're good at taking and stuff, all right, freaking put on your pants and start trading, or take a dump or get off the toilet, to put it that way. And that's just my opinion to myself. You can't do this at 1 contract forever. At some point, you need to figure out your, if you found your risk tolerance and you're not happy with $300 after 6 or 7 really good trades, and you're like, you know what, I know I should be trading with more, then you need to be trading with more. And I think then you're probably at that level to start trading with whatever size you're comfortable with that allows you to do what you do without changing your entries and exits. So just my, useless opinion on that, but, take it for what it's worth. And if y'all have any thoughts or comments, drop them in the comments below after the video. If you're rewatching this, let them know. Or if you have, you can throw them in now if you see something. See if I missed anything. Yeah, Colton. I'll keep doing the. Yeah, I got you. I'll keep doing the shows, where I do trade reviews and talk about them, and I know Mitchell and I talk about it throughout the day and stuff, and we're really just watching those levels that we call out and stuff, like in Amazon here or something, or even here, it's like it hits the level, like we have an idea of what we want in our head, so it's semi-easy to, when you're looking at something, you have a prearranged trade in your head, that you know you're going to trade. Like let's say for instance in Amazon here, you notice it failed the 21, so you say, you know what, next time it hits the 21, I'm shorting it. It's already in your head and you're just watching it. You're not trading any of this chop. Next time it hits the 21, I'm shorting it. All right, it hits the 21. All right, it hit the 21. Next candle, when this candle fails to break out, hey, I'm shorting Amazon here. It failed to break out. All right, I'm shorting it. And then you get out and you're like, hey, next time it hits the 21, I'm shorting it. It's already in your head. Hit the 21, or it's right at the 21. All right, next breakdown, I'm taking it. All right, we broke down. You know, hey, you know, next time hit the 21. I chopped around a little bit. I'm going to leave it alone. You know, this is 3 moves. You have, you know, if you want to call that a down move, but 1, 2, 3. 3 legs down in Amazon. All right, 3 legs down, you should be done, generally speaking. So you leave it alone. You're like, I'm going to leave it alone. Not going to take it again. You know, bounces back up, hits this descending trend line. And, you know, if you want to take that, go for it. If you already had this on, but it comes back down, bounces around, you know. It's below the 21 now. Came below the 21, so this would be a way I would think about it. It's like, okay, if I had this trend line and I shorted it, if I didn't, all right, it went below VWAP in the 21. It came back up into VWAP in the 21, so I'm thinking this in my head, Colton. And it's like, all right, so it hit that level. It's either going to break through it and go higher, and this is going to be support, or it's going to break down. It broke through it. We're overall in a downtrend. The market's in a downtrend. It came back into VWAP in the 21. I'm going to look for a short. And then the next thing I'm saying in my head is next time it's near the 21. So 21, 21. And so you have that idea in your head of the trade you want to take. And so when the trade comes, your entry is good because you already know what you're going to do before it gets there. And you're just like, here we go. And that's the only reason I think that Mitchell and I sometimes have good entries. We have bad ones too, but it's because there's no chase in a sense, and we're already looking for something specific to happen as we're watching the Qs or Amazon or something. It's like if I call out a good Google entry or something like that, and it's like, dang, you got in that 2 points before me. It was just because I was already looking at a level and I wanted to short there instead of lower, so it makes your entry kind of a little bit easier, if that makes sense. And I think that's why why sometimes we have good entries, at least in some of the names we call out. Why are these boys waking up? He claimed whether he took J, 1 or 5 contract, the feeling and focus is the same. After you take multiple 5 contract losses, it feels way different than 1 contract loss. Yeah, dude, that's for sure. That is a big difference, and he does have to mentally prepare for that, the losses, and I think that I kind of alluded to that, and I agree with you entirely. And that's why I said when he does that, the thing I would be worried about for XO is if he does that, he's used to tearing up to make it back. You can't tear up to make it back. Like, you go 5 contracts, and then now you're going to trade, like, what are you going to do, jump to 10 to make it back? Like, good trading is what you have to do to make it back. That's what I did today. I never sized up today to make my money back. As a matter of fact, technically I sized down because I was trading 5 contracts of Amazon instead of, 10. Same for Tesla. I was trading like a little bit lower. I went in the money and I traded like 5 contracts. I never sized up to get back today. So if you can't do that, XOXO, then you can't. I mean, you can size up, and at some point you just have to do it and get used to it, and you're going to have to pay your fees to the market, the tuition to the market, and you're going to have to learn not to do it. And really, most of the time, the only way to learn is to actually do it and get smacked around a little bit, unless you're one of those people that just learn through, learning, like, oh, I just look at that and I know not to do that. But, a lot of times you're just going to have to get smacked around. So at some point you just have to jump in, but I completely agree with Jay, and that's the truth. You really need to be able to handle your losses and that feeling of them, and to be able to respect your daily stop loss when you size up. And if you can't do that, you're going to learn quickly one way or another. And I don't mean to be mean about it, and I'm not trying to be, but at some point it's just like, and I don't mean this in an aggressive way, but it's like at some point you just got to do it. It's as simple as that. You just got to do it. and that's all that there is to it. And I don't mean to be, you know, just that's just it. You just, you know, rip the band-aid off and start trading it, accept the bigger wins and losses if your account can handle it, and start doing it and be really consistent and stuff. And if you have a hard time, you know, just know what it can do to your account when you start losing. And you know, you just have to realize that, and I just have to realize that when I size up. And if you size up too much, you'll know, because you're going to start losing really quickly, and you're going to start making a lot of mistakes, and your account's going to go down really quick, and you need to be able to kind of adjust for that and realize that that can happen. Let's see. Nice, man. I hope you get back there really soon, Colton, to over margin. Just keep putting those days together, man. It comes so quick. You'll be there really soon. Keep it up. That's awesome. I love it to see people come back. What do you mean your account size? You can take a loss with 5 contracts over and over. Your account says BS at some point. I mean, sizing up is either going to get you there quicker or not. What's up? What's up, Dev? How's it going? Hope you had a good day today. Do you think it's a bad to never trade large cap stocks if it's never been my style? No. I mean, I only trade large cap. Like, I don't trade any small cap. But I don't think it's bad. Like, you need to do what you are comfortable with doing. And if you're saying that I mean, if you're saying, hey, you never want to trade a large cap names, I mean, that's fine. I would never tell you what to do or what not to do. NASCAR. But it's good to learn to trade them. I mean, they move very orderly, generally speaking. If you watch and you know some of the strategies we do, and you know, you've seen the video with Kelly and the videos with Geronimo, and using these trend lines and using stochastics and stuff. The nice thing about these is, like, I could go buy a small cap. I could buy 1 million shares of some of the small caps or something, and I could adjust them. You know, you could have pump and dump rooms. You could have all this other type of, you know, other kind of stuff. You know, I can sit here and scalp and make really good money trading 5 contracts of Amazon, 10 contracts of Tesla, 20 contracts of Square, whatever it is, and I can make thousands of dollars in a day just scalping those throughout the day, or doing swing trades in them throughout a day or an hour or 30 minutes or something. So are you making money trading small caps? Are you happy trading small caps? Do you have strategies that work trading small caps? Like, if you do, and you're happy with how you are as a trader, then do what you do, man. Like, as long as you're good at what you do and you're making money and, you know, whatever. And then stuff like this is always here too. But I never think it's bad to grow as a trader. And even if you're mainly trading small caps, to come in and be like, let's see how this works, and let's see how this trades, and let's try some of these things, because I think I understand what's happening and I think I can make money in them. So I think it's good to trade large cap names. Yeah, for sure. I mean, that's mostly what I trade. So even if it's not your style, watch and learn and adapt. And if you can do that slowly and gain confidence in it, it just adds another dimension to your trading, and it just gives you an extra layer of confidence and skill that you have while you're doing this to help you kind of get better at yourself as an overall trader. Great. Glad you're green on the day. Yeah, I talked about it earlier. I was like down early and ended up coming back. Wasn't a it was a great day in the sense of I had like a 7K swing from my lows to my highs or something like that. So I just look at it as a win, because if I'm down 4 grand and then I come back green for a nice flat green day, like moderate green day, then for me, I'm like, you know what, I look at it in the breadth of where I was to where I'm at now. That's 4 grand I don't have to make back tomorrow or whatever. So I had a decent day due to a misclick early, and then I didn't trade great, and then I missed some opportunities because I was trying to pick the highest conviction trades. And man, I did fine though. It was a good Monday. Yeah, I'm green. I'm happy. I'm very happy with where I was at today. So thanks, man. I appreciate it. It was a good day overall. Choppy action early. If it wasn't for the first 40 minutes, I would have had a really good day. Really bummed about that misclick in Tesla and a little bit too too many failed trades early. I'm just reading Blademan's comments. Yeah, it does matter, but at some point, like, I don't do no 2% of my account trades. Like, I'm not risking 2% of everything. Like, the amount of stuff that I go in there, like, I'm half the time risking 100% of what's in my trading account. And while my risk isn't, like, I'm not risking it to zero, I don't think my options in Tesla are going to zero right away. There's plenty of times when I risk more than 10% in per trade in what my account is at that week or whatever it is. And even when I was growing and trading, I'm more of an aggressive trader. And I've talked about it before, and there's benefits and risks to that. And like within a day, maybe 10% of your account or 5% of your account or whatever it is. I mean, you definitely have to have a plan for a stop loss and all this other different kind of stuff. But I've never gone into my account with these hard math numbers that some of these books and, I don't know, some of the different traders and stuff do, that kind of talk about things being that talk about like percentages and you should only risk this much and risk this much. I mean, I'm not saying that stuff's not legit. It's just not the way I trade, and it's not really the way I look at my risk reward, and it's not the way I look at my trading overall. But your account size does matter. How you trade matters. But at some point, if you want to do this, you can just sit there and you can 100% sit there and do this with 2 contracts. Like, you could trade all day with 2 contracts, 3 contracts, and you can be in this range. Like, that's a good living right there, guys. That's not bad. Like, that's pretty good living per year. If you do this for a year and then you set that aside, or for 2 years, and then you do that, you pay off a house, or you set that aside, like, that's great money. I'm not knocking that at all. You could sit there and trade and be consistent over an extended period of time with a small account and grow that account. And if you're willing to take 2 years or a year to do that and to average that $300 over the course of a year, dude, you're great. You're golden. You can do that. You can get a 6-figure account, then you can size up. But if you're like, I think I'm there and I should be making more now, and I'm confident in my stuff and I want to do it, at some point, it's like, all right, dive in and do it. It's kind of like fighting. It's like you fight in amateur fights or something like that, and hey, I think I'm good enough to go up and do somebody else. It's like, all right, eventually you got to go get punched in the face by a bigger person. So I don't disagree that there's definitely a good amount of risk, and your string of losses can wreck your account really fast. And the first time you start trying to size up to make your money back, because you're used to sizing up and making it back, and then you size up to 10 contracts when you've never traded that before, or you're not used to it, or your account's not, that's not part of your trading plan, and then you go in and you size up to it, yeah, you're going to get wrecked. Yeah, you won't get punched in the face and knocked out. You're going to feel what it's like to be trading with a bigger size, and then you're going to have to reevaluate if you want to fight with the pros or not. If you want to come, yeah, if you want to, then you want to get back in that ring again and fight the next day. Or if I just want to fight amateur because I'm comfortable with that, and not that trading 1 to 2 contracts is amateur, but I'm just going to trade 1 to 2 contracts. I'm good with that. I'm comfortable with this. $300 a day, $500 a day. All right, I'm good. And then you're fine, and you're happy, and you live your life, and you do your stuff. And yeah, and he said that, and this whole basis and premise is on consistent trading. And it's not about me, it's about, if I was talking to me, yes, but this is what I did early on in mine. I did this, I was consistent, but I just did the strategies, and it was like, yeah, this strategy works, I'm very confident in it, and I just started doing it, and I did it with 10 contracts. Mainly because I like even numbers. So I'm not saying that's for everybody. It definitely shouldn't be. And the premise of the question was, I'm consistent. And that's kind of the premise of the question that I I answered was, I'm a consistent trader, and and this that, and it doesn't bother me going heavier. That's the premise of the question. It wasn't I'm kind of and I'm not sure, and what it was like. I'm a consistent trader. I'm doing really good, generally speaking. I'm solid most of the time. I'm just getting frustrated because I read the question. So that's kind of the thing. It's, are you a consistent trader? And then at some point, just jump in. So, and they can trade 10 and all that. So at some point, you just have to jump in. If you're consistent with one and you're consistent with two and you can do it, start trading. Hey, thanks, Dev. Dude, I really appreciate it. Means a lot. I'm glad I can help some people out and kind of help them on their journey and just be a part of their overall journey to success. And it means a lot just to be on here. And if you help one person out, you help somebody's life get better, and maybe their kid's life gets better, and all this other stuff. So just keep doing what we're doing. Nice, congrats. Congrats for sizing up, Dev. That's sweet. Sizing up is key to getting here. That's awesome that you're comfortable with doing that you did it. You had your best day. Good job. Keep doing what you're doing. Stay comfortable, stay trading in your range, but good job sizing up. That's a good step towards getting to that next level. Most traders are losing traders. Bigger size, bigger losses, the majority of traders. Yeah, but 95% of people fail, and 95% of businesses fail, probably. If you just go start up your own business, there's a good chance you're going to fail. So bigger size just equals more of what you're doing. If you're constantly losing, then bigger size equals more losses and a bigger loss. If you're a consistent winner and you're consistently trading and you're journaling your trades and you're doing good and you're really confident in the trades you're taking and what you're seeing in the market, then sizing up is going to reward you for it. And not sizing up beyond your mental ability to handle those trades. But a lot of people are, and I'm not talking about EXO now, I'm talking outside of him and outside of all this, generally speaking, that a lot of people are just scared to size up, and a lot of people make excuses and reasons why you can't do it, and all this other stuff. I could make a living off 5 contracts. Be honest with you, I never have to take more than 5 contracts to make a living. That doesn't mean I'm going to do that, because I'm very comfortable trading 10 to 20 contracts. In some names, like when I do the triple Qs or I do Square, sometimes I'll trade 50 contracts. Sometimes I trade 100 contracts. I'm very confident in my methods for risk reward and how I do things. But I never, if I was just trading Tesla and Amazon at the prices they're at now and how they move, and Google and stuff, even they're gonna split soon, I could just trade 5 contracts and I could make a living. I think I could probably do the same thing in other names that were smaller. I could scalp 10, 20, 30 cents at a time in Square, Facebook, the Qs, with 5 to 10 contracts. I don't have to size up more than that to make a living, but I am comfortable doing it. And sometimes at some point you're just going to have to do that in your trading journey, or I don't think you're going to necessarily progress, and you might always have a reason why you don't do it, and your reason might be valid, and you might need to just have that consistency. You might want to say, and you have to make your own trading plan. I can't make a trading plan for you. I'll give you advice if you ask me, and advice might be the wrong word. I'll give you my opinion, but there's nothing wrong with just being in there and being like, yeah, I'm somewhere in this range daily and I have losses. Let's say your day is anywhere in here, on average, and generally speaking, if you trade consistent, you're in here. If you don't, you're in here, and your stop loss is here or something, a little bit more, and you make on a day, or let's say double what you make on a day. So 2 days, you can always get that back over the course of a week, and you add this up and you're somewhere in this range. Over the course of a year, your trading account's going to be pretty big. The problem is most people blow out. They don't respect their stop losses. They're not consistent. So are you consistent? If you kept a P&L tracker and you look back over your trades and you did all that, are you consistent over the course of a month? Is if I looked at a calendar and we looked up at it and you had green on it for a green day and red on it for a red day, where are you at? Are you consistent? If you're consistent and you can consistently put those days together, then yeah, you're fine. you're good. And you can start, within your comfort level, taking size to your comfort level if you want to. You don't even have to. If you're just happy with that, then don't size up. If you're happy with where you're at and you're trading one contract or 3 or 5, and you're like, man, I feel like maybe I should take more, but I'm kind of happy with where I'm at, and I have no stress, and I just trade, and I make this money, and I make an extra $500 to $1,000 a day, then frickin' don't size up. Just sit there and trade and take your money and log out and be happy and have some extra spending cash, or pay your mortgage off or something, doing it on the side over a year or two. You don't have to sit here and make $5 grand a day or lose 10 grand a day or whatever it is and have the extra stress of sizing up in your life if you're happy with where you're at. But at some point, if you want to do it, and if you're, whatever it is, and you feel that that's the next step, then just take off the pants, and you need to trade with enough size to meet your goals. And that's kind of what it is. You do have to trade with the amount of size that meets your risk reward, and kind of just grow as a trader and do that. But I'm not a trader who's had a lot of the psychological toxicity over the years of trading. Just flip it. And this is an average NASCAR. So that's just showing what you would make. And so that's just showing what you would make. So the chart is just showing what consistency can do. Because the problem with people that make money is that they might be making this number and they're unhappy. Like at the end of a day, the point of this is to kind of be like, you're at the end of a day and you're unhappy with where you're at. Well, look at what just printing that every day does. Because I've said it a million times, if all you said was make this and log out, I could do that every single day. Almost every single day. I could take the appropriate size, I could find some trades that work, be very patient, and I could make that. But the problem is I'm very aggressive, I'm trading a lot, I'm aiming for this number plus, and it can be difficult to hit. Now you have to take this as a rolling average. That's why I just said a minute ago, use an average, because you're going to have losses in here, so your losses here, so where are your losses at? How's your risk reward doing? What does your trading look like overall? What up, graph? How's it going? So what does it look like, as your average? And that's why you have a daily stop loss. So how often are you hit a daily stop loss? You've got a calendar on your wall, or you're using Trader Sync or Trader View or whatever it is to track your trades, to look at your average. Where are you at on your 7-day? Where are you at? When are your losses? When are your losers? Are you doubling, are your losing days more, are you doubling your weeks? Is the one losing day you have tripling your week? Or your green weeks? Okay, you need to change something. You need to respect your stop loss. You need to have $1,000 stop loss on a day, not because it will, that you can't make it back, but because you need to respect that, because you need to keep that average up. So over time, average per day is going to get you there, and that's what you're going to make at the end of 253 days. You're going to look back at it, and you're going to be like, oh, I averaged $1,000 a day. I might have had $10,000 days and $20,000 days, and then I went back down and I had 500, or whatever it was. You look at the end of the year when you get your tax forms, and you look at that and you're like, oh, I only averaged $500 a day. But I'm trying to, wow, I only averaged $500 a day. But when I look back at my year, I made $500 a day and I wasn't happy when I made it. But that's all I averaged at the end of the year. So I was over aggressive. I was over trading. So I had way too big of losses. Whereas if I would have just slowed down and I would have took $1,000 day, I would have made, $100,000, $50,000, $60,000, $70,000 more at the end of the year, if I would have just been intelligent and respected my stop loss at the end of the day, and not blown everything out, and just been consistent and steadily traded smart and added up, your $300 win days, and, keeping an average and not letting your losses get out of hand, and control stuff like that. So it's that average, and you just kind of keep that in there, and you just, you grow it. And so that's kind of why it's important to recognize what you can make making so little, because a lot of people are like, oh, I'm gonna do, you're trying to make all this 5,000 a day, 10,000, and you try to do all this, and then you sit back and look at the end of the year, you're like, wow, I only averaged $1,200 a day, and I was never happy when I was green $1,200, but that's all I actually made. I should really be a little bit more consistent and just, you know, trade a little bit safer, not give back $5,000 or $10,000 a day. And if instead I was a little bit more consistent with my trading, I would have a better year. I would have a better month. So the idea is consistency. And if you want to see the negative of those numbers, just flip them. But it's an average. So yeah. Well, I mean, if you have that much money to lose, if you're a trader that loses $5,000 a day and you have that much money to lose, it can definitely happen, for sure. I might not be. I mean, my general thought process is just freaking do it. It's like the Shia LaBeouf meme. Just do it. It's just do it. You know, at some point, if it's within your consistency level, there's nothing wrong with doing, you know, 1 to 3 contracts and then 3 to 6 and then 6 to 8 or something like that, and just building your ability to take them. What's up, Rooftop? What up, JR? How's it going, brother? Talking about sizing up, telling people to take 100 contracts and everything. So if you're not taking 100 contracts in Amazon, you're wrong. You're not a man. That's my advice for everybody. That's one way to get wrecked. Pretty good, man. It was started off rough-ish day and then actually ended pretty solid. I'm really proud with how I ended today. Notice this. I drew this on a 2-minute chart, trend line, little descending tops line or whatever, kind of like the one you drew in the Qs that time. Put it here, and then you have a hit and fail, hit and fail, hit today and fail. So I'm going to be watching that one in the future. It was, man. It was a very annoying start this morning. The first 30-45 minutes was just like, ugh. And I actually, like, I took some trades I thought were good trades, and I just got chopped around a little bit. Didn't take the money quick, and then started taking the money quick. Misclicked. Bought puts when I didn't mean to, and bought puts when I meant to buy calls, and then sat in them. And I'm like, why am I down $3,000? I should be up $3,000. And I'm like, oh crap, I'm an idiot. Got out, and then I made the money back midday into day. Came back and shorted Amazon here, and made my money. So I was not the best day ever, but I'm very happy with getting back to green. And to me, that's always a win, man. If you can go from like medium, you know, green, or, you know, red, you can go from red and then you can come back and you're like, you know, decently green. It's just like, that's a good day. I don't have to make it back tomorrow. I'm coming tomorrow clean. You bought calls or puts too? Flip side. A great video tonight. I missed some of it because the wife and I were looking at stuff, but I watched most of the thing tonight. I've got to go back and finish it, but great video on noticing kind of the trends here. I actually saw that in Amazon earlier today. You could kind of see that if you were looking at, man, I want to know when to short it and when not to play a 21. It was like, you know, your leg up, your fail, so 1, 2, 3. You know, you can easily see that. It's like, well, how do I know not to short it the next time it hits the 21, or that it's not going to flush more? I mean, you don't know, but there's your risk on, risk off. So fail the 21, fail the 21. There's your first leg down, second leg down, third leg down. Each time it hit the 21, you had a short in Amazon. Kind of the same thing later in the day. I was kind of looking at some of this, talking about it earlier, for identifying when to, like, how to zoom out and make your day back. It's a difficult thing to do, but if you can step away and go work out or go for a walk or just play with your kids or do something else, come back, sit down, zoom out on all your charts, throw up some trend lines that may or may not mean anything, and then find a trend or find somewhere where you're in the first or the second leg and some levels that matter, come up with a trade idea in your head, watch it come to place. You can scalp your day back. I'm glad I got back without sizing up. Yeah, it's a good day, man, though. Choppy Monday, but definitely opportunities to make it. Graph, any thoughts on getting back into the market after missing time, out of town, etc.? I feel like I trade best when I'm in a rhythm, and with the market daily, been out since last Wednesday. Yeah, I don't know what others think about this, but I would agree. I would think that if I take time off, my danger coming back is I try to like make what I think I should have made when I was off, or I'm just like, I feel like I'm mentally good when I might not be, and I'm too loose and I'm too aggressive, I think it doesn't hurt to come in and trade really intelligent, like trade small and intelligently and kind of get your feel under you. So in that case, I would size down if I was coming back in after a week away. I would come in, and if I was normally a 10 contract trade, a 10 contract trader, I would come in as a 5 contract trader that day and I'd be like, hey, I'm gonna scalp some I'm gonna scalp some 5. I'm gonna put a good day together. It's like, all right, I had a green day, and then I kind of log out or I size down. If there's still a trend going, sometimes I stay in graph and I'm like, I'm gonna mess around a little bit and kind of get my training wheels. But generally speaking, when I come back from a long time off, I size down. I put together what I think is, I just kind of trade consistent. Try to get green. I get green. I'm like, all right, I lock it in, and I do that for the first day or two, and I just see how I feel coming into the next day, and maybe a day or two in, I go back to my default size. If I feel confident and I don't feel that I'm trying to make money that I missed, or because you really want to get how the market's feeling or the names you're trading is feeling. It's like, if you're not sure how Tesla's been acting and you just look at a chart, you might be like, oh man, this is just easy to play, and I'm going to come in and I'm going to smack it, and then all of a sudden you get thrown around, and then you've got to come back in a 2 days after getting back, you're down however much, and then you're a little toxic. So I don't think it's a bad idea to come into tomorrow, maybe size down a little bit, take 5 to 10 trades or so, good trades, lock it in green, come back the next day, maybe give yourself a little bit more room the next day if you're feeling kind of good, and if you're happy with where you're at, and then after that, just get back to normal. That's just my opinion, and that's what I personally do. If I am out for a day or two, if I'm out for a week, it would definitely be, I'd give myself a day or two. If I'm out for just a day or two, I might just give myself, I'll just lock it in green early and then come back the next day. So, because I know CT, that would have been a good question to ask CT on Friday, because I know he, when he was off and he came back after going to Puerto Rico, he blew out for a couple of days, and it took him a little bit to get back because of that. So, yeah, I love coming back to the market after I've been away. Did you do good today, JR? I assume so. The Q seems scalpable. I assume you had a good day. Or hope you did anyway, man. In NASCAR, the Web Bull account is entirely focused on trading IPOs. Biggest winner is 40% higher than the biggest loser. Nice. And your other account, on the other hand, you're a break-even trader. I mean, I don't know what, do you trade like what we do? I mean, yeah, you can man up. Nothing wrong with just jumping in. But you just need to know where you're at. Do you, I don't know what kind of trading you do NASCAR all out, other than the IPO stuff, obviously. And if, you do that and you're good at that, dude, that's sweet. Just do that. If that's what you're good at and you're doing it, then trade it. Nothing wrong with that. Nothing wrong with that. I don't trade them, so yeah, I don't know if you trade with us or kind of how you trade on the other stuff, but it can be difficult, and learning to scalp options and stuff, if that's what you're doing, could definitely be hard. But you say if you take time to learn it and you take time to get good at it, it can be very profitable, and it can be consistently profitable. I don't know how IPO trading is, if you just have to wait and smack the crap out of something and make your money, and then you have to wait a while to find another good one that you like to trade correctly or whatever it is. But you can be consistently profitable scalping options in names like triple Qs, Tesla, Square, Facebook, stuff like that, and you'll be just fine. Y'all got anything else? Any other thoughts before we call it tonight? A little over an hour. I'm gonna get up at 5 a.m. Eastern to go work out and do deadlifts tomorrow. I'm only gonna trade for I'm golfing at 10:50 tomorrow, so I'm probably gonna leave at 10. So I'm gonna trade 45 minutes and go golfing. That's my plan. Yep. So I'll see y'all tomorrow in Discord. Appreciate everything. You guys rock. Love you guys. If you have any, if you like this type of content, throw a like up on the, down on the video. Leave a comment. Subscribe to the channel and all that. Really working on, we're working on putting out a lot of content soon. Gym, tan, laundry. Is that what you did tonight? You went, worked out? You're welcome. So yeah, leave stuff, guys. I appreciate you guys coming out, spend the time with me. We'll talk about stuff. I like this line. Throw it on. I'll see how it holds up. Be watching tomorrow. I hope the market, hope the futures people don't screw us up too much, and we get a flat open tomorrow so we can catch the actual move early, whether it's a breakup or breakdown. We'll see. But whatever happens, I'll trade the charts in front of me. If you guys don't trade with us in Discord, links in the description. You can come trade with us every day. It's a good time. We enjoy it. And again, I will see you guys tomorrow in the Discord. Have a good night. Sleep good. All that fun stuff.